So finally we have a rate cut and the Fed has decided that it's time for the interest rates to be coming down. Welcome back guys, it's Cash Booza and today we're going to be taking a look at the stock market, what's going on with the S&P, the Nasdaq, the Bitcoin, Tesla, Microsoft, Google, Apple. It's going to be a jam-packed show. But first, we are going to head over to my screen and take a look at some stats. So Bank of America sees rate cuts propelling gold to $3,000, and I've been screaming on top of my lungs that gold has a very nice $3,000 way before Bank of America did. So Cash Booza 1, Bank of America 0. The shiny metal has been trending in an extremely good rally, and we're going to take a look at the chart in just a second. But let's take a look at some more stats again. 30-year fixed mortgage rates are coming down. It's the lowest it's been this year and trending lower, and rightfully so, because the market is fearing a recession. Is a recession gonna happen? Is a soft landing gonna come? Like Jerome says, we're gonna be all around it. We're gonna be trading this market all year long. But let's hear from Mr. Trump. Mr. Trump, so how are we gonna trade this market since you are gonna be the next president?
Can I see this. It's so incredible. Ding, 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 ding. Boom. Okay. Pshin, boom. Star Wars.
Star Wars. We're gonna trade it like Star Wars. So 30 years is coming down. Recession, no recession, we don't know. Jerome is like soft landing. And speaking of soft landing, let's take a look at some probabilities here. We've got a very nice chart that shows us what the probabilities and how the average scenario for a recession versus a non-recession is gonna look on the markets. As a matter of fact, we are right here, month 0. This is when the cutting starts to happen. And take a look at this very interesting chart. If a non-recession path takes place, we are up and above. It's a very healthy market. Everyone is happy. All the equities are going up. No problems in the S&P. But take a look at in a recession scenario. If a recession does take place, we are gonna be in a very choppy market for the next 6 months, and then we are gonna see a major decline in the equities. So it just doesn't mean that the market is gonna collapse just because Jerome is like, we're gonna be cutting rates. That means that you don't have to sell your S&P. That doesn't mean that you don't have to sell your meme stock. Well, maybe sell your meme stock, but don't go ultra bearish on equities because it does take a little bit of time. Let's take a look at what else is going on. So I've been talking about this quite a bit. Let's take a look at what happens with the 2-year bond yield versus the Fed funds target. So all you have to remember here is that the green line is basically what the Fed follows. Looking back all the way in the 90s, the Fed has very closely watched the 2-year bond yield, the green line. Look at this, it's a perfect correlation. When the 2-year starts dropping like a rock, Fed is like, you know what, it's time for us to be cutting rates, and they do. So what's going on right now? The 2-year again is dropping like a rock. Very interesting. And Fed is behind. Look at that. Fed is behind. They're trying to play catch up. They will play catch up. They've already said that we can expect 2 more rate cuts by the end of the year. And that is going to be the most aggressive rate cutting. And so we'll take a look at some more stats. Very interesting. Look at that. Mag 7 remains the most crowded trade. Everyone is like, you know what? We just want to own Apple, Microsoft, Google, Nvidia. We don't want to do anything with China. We don't want to do anything with the small caps. Everything else in the S&P, we're not interested. S&P Mag 7 is where we're going to park the money. The most crowded trade. It's coming down a little bit, and the fund managers are like, you know what, is a recession gonna play out? I'm not sure. Let's just protect the money a little bit and reduce the exposure from the Mag 7. What else is going on? So S&P returns, very important. Look at that. S&P returns on average after the Fed starts cutting. Average is minus 1.1. So we can expect about 1.1% decline on the S&P. But it's not all doom and gloom because we have 4% up in 6 months and about 5% up in the first year after the rate cutting starts happening. People are like, sell the cat, sell the dog. If you sell the cat, you sell the dog, it is gonna be this.
Emotional damage.
emotional damage. Don't give yourself emotional damage. Keep an open mind in these markets. We can go either way. We can go to the upside, we can go to the downside. A recession has not materialized yet. Let's head over to the charts and see what is going on with the S&P 500. Again, touching record levels. S&P, unbelievable stuff. We'll take a look at from a daily perspective. Look at that. It's a gap up. It's an open and a close, a high and a low. The market is closing in a very indecisive manner. Look at that. Basically opened and closed at the same level. Market is like, we're very happy with this until the next piece of news comes out. Taking a look at the Qs, what's going on with the Qs? Again, goes up, comes down, basically closes at the same level. IWM, what's going on with IWM? A little bit better performance from IWM. I have been watching and I've been yelling on top of my lungs that you guys gotta respect this level. Respect 220 level, because what's gonna happen in IWM, if the bullish price action does continue, it's gonna go up, there's gonna be a sell-off, there's gonna be some profit taking, and over here a whole bunch of FOMO is gonna happen, and then the market is gonna skyrocket on IWM. The IWM has not been performing as well as the S&P because of those Mag 7, because everyone has been riding that rocket ship on Mag 7. The IWM has fallen behind. We'll take a look at the dollar index. I've told you guys some excellent trades on the dollar index. We'll take a look at from the weekly chart. Again, great level on the dollar index. It's a long trade, guys. It's not something that's gonna be quick in and out. It's gonna take some time. So if it respects the weekly 200, we can expect some bullish price action, specifically because the US dollar to yen is weakening so much, and because of that it might spook the market, and if that happens, everyone's gonna rush to the US dollar, the market is gonna pump. Just be aware of that. Wix, what's going on with Wix? It's a Wix crush, not too much happening. Wix is coming down very aggressively at a healthy 16 level. No concerns yet, no volatility spike. It's all good. Apple, look at that. Apple, a massive pump of 3%. Unbelievable stuff on Apple. You know what? A couple of days back, I was like this. I was like this on Apple. But right now, if I take a look at the daily chart, watch this, what happens. The daily chart, it gapped down and then it's a gap fill. And then because of the futures spiking yesterday, last night, Apple also put up a very strong performance. Everyone just keeps buying Apple, and why not? It's just a strong company. Buy and hold, no problems. If you don't know how to trade, buy and hold, absolutely okay. Microsoft, what's going on with Microsoft? So Microsoft is up 1.8%. I can see Microsoft coming back down a little bit. I can see that there's a very, very healthy demand zone over here at about 426, 427 level. If that happens, there is gonna be some buying action, and that's a classic reversal. You guys don't have to stick to your screen all the time. I'm going to show you a nice trick in TradingView. Look at that. You right click and you add a trade alert. You say okay, you create trade alert every single time it crosses the level, and that's it. Every time it crosses the level, you'll get an alert on your phone or whatever device you're using. Let's take a look at Tesla. Everyone's favorite. Tesla pumped. Massive. Look at that. What a performance on Tesla. We're gonna do the cat dance on Tesla. Look at that, 7%, epic stuff. Wow, unbelievable, man. Let's go Tesla. Where are my Tesla holders? Yes. Wow. Let's go. Unbelievable stuff on Tesla. Can we trade this? Look at that. It just broke a very key supply level. The supply level was just right here, guys. It was right here. Just broke the 235 level. It's a clean break coming to the upside, closing at its high. Very important. Look at the close. So closing at its high, and I can see the strength coming back in Tesla. Price action is a bullish one, and the strength is going to continue. We'll take a look at gold, my favorite of the favorites of the favorite. Absolutely a monster chart. Gold, look at that. Already testing the all-time highs. We'll take a look at the macro picture real quick on gold. On the weekly, it's touching all-time highs, guys. And I can see some real strength in gold. I can see gold going to $3,000 an ounce. We'll revise the price target again on gold at 3,000, but 3,000 is the price target. No reversal sign, no breakdowns, absolutely monster. This thing is a rocket ship right now. Remember when GME and AMC back in the days, that was a rocket ship? Well, this is the rocket ship right now. And what drives me crazy is that no one is talking about it. Let's take a look at silver real quick. Again, very similar story on silver. I can see silver going up to $35. And we'll see if silver reaches $35. But the way gold is pumping, I can clearly see silver also pumping really hard. And that's all I had for you guys today. If you guys liked today's video, give me a thumbs up, leave a comment. I want to hear your thoughts, and follow Cash Booze. I'm gonna see you tomorrow.